Right now, we have a study session. First on the agenda is Plante Moran Audit Report.
I can see that.
As Jake is setting up, I'll do a quick intro. Thank you. My name is Martin Olenek. I'm the engagement partner for the financial statement audit for 2018.
Thank you.
With me is Nikki Acho, who's passing out the slide presentation, and Jake Meridian, who's trying to get the screen fixed a little bit. We have a few different documents that you have in front of you that we're going to go over this evening. A couple of the main items, the graphs that Jake's going to go over will highlight the thickest of the documents, which is the financial statement itself. So instead of going through the 80 or so page document, we're going to go through the graph presentation instead. The one thing I did want to point out in the financial statements, and again, this is the thickest document that you have in front of you, is on page 1 is the opinion letter from Plante Moran about the financial statements themselves and the amounts that you see in them, etc. I do want to point out. So this is the book? No, it would be the thickest. Mine's
the ones you gave us.
The one that's bound.
No.
The white one?
Financial report with supplemental information, 30th 2000.
So mine looks a little different because I printed double-sided and smaller font to save some trees. So on page 1, and actually continuing on all the way through page 3, is the opinion letter itself. I do want to point out that it's, once again, an unmodified opinion, which means that you can rely on the numbers that are within the financial statements. I do want to point out a few things in the opinion letter itself. We do talk about the auditor's responsibility and how the testing is performed. Basically, what I want to point out is there are certain guidelines that are put upon auditors in every community and all throughout the United States that auditors have to follow. So there's certain program steps, certain things that we have to test in order to get comfortable with the numbers that are presented in front of you. So we do those, as well as we also do what we call planned surprise procedures. So they're planned or they're surprise to the city itself, but what we do is we try and identify certain risk areas that may exist. We talk to and we send out a letter, pre-audit letter to the council to find out if there's any questions or any concerns that you may have in order to address those through our audit procedures. So even though that we're mandated by certain regulations in order to do certain procedures, we also add additional procedures as a result of the risks that may be identified through our interaction with the city, as well as any concerns that the council may have. So we've done those steps as well. And based on all our testing, you can rely on the numbers that are presented in front of you in the financial statements.
So,
Councilman Abdullah?
Sure. I know you mentioned that you have some surprise audits, but what about things from like previous years that were obviously major concerns or concerns in general? Do you automatically recheck those the next year, or do you do random something else? How do you pretty much?
Yeah, so any concerns from the past, so if we had findings in the past, we look into those again just to see if those items may have been corrected, and if not, we'll document and we'll again present it to the council once again, so that way you're aware that those items still exist. And then what we do is some of the concerned areas, like from the past, if there were findings, sometimes they affect some other areas. So just as an example, if we feel that there's lack of segregation of duties or something in a certain area, we may feel that it also impacts certain other areas of the audit. So therefore, we'll implement some additional procedures in order to test those amounts as well. So we always look at the past. We also make sure that we test things based on your concerns as well.
Okay, thank you.
So like I said, based on all our testing, it is, once again, unmodified opinion. So you can rely on the numbers that are in here, and it's exactly what you should expect every single year, making sure that's unmodified. Nikki later on is going to talk about some findings. So we did have some adjustments to the financial statements. So originally when we receive a download of the general ledger accounts, we put it in our software to start looking at analytically and do different things. During our testing, we identified some items that we had to make adjustments to, so that way the statements would be presented to you in accordance with the rules that are given to us by accounting standards. So the numbers that are in front of you have been adjusted based on those adjustments that we identified. So once again, to make sure that you know that the numbers are have been impacted in the financial statements. So with that, I'm going to turn it over to Jake so he can go over the graphs. Once he does that, Nikki and I are going to go over the findings and some of the recommendations that we found during the audit.
Okay. Starting on slide 1. Here, this slide provides an overview of the various categories of the corporate fund revenue. Total 2018 corporate fund revenue was approximately $44 million compared to $42 million in 2017. As was the case in prior years, the property tax revenue, which is approximately $25 million, is the largest revenue source for the city, followed by state shared revenue and other state grants of approximately $6 million this year. Overall revenues increased across all the categories in 2018, with the exception of small decreases in federal grants, interest, and other revenue, as well as licenses and permits revenue. Moving on to the next slide.
If you don't mind.
Sure.
Madam Chair.
Councilman.
In regards to state shared revenues, we've been told a multitude of times at some council meetings that they had been coming down and coming down and coming down. But then looking at the numbers here, you could see that there's been it's been going up from 5.3 million in 2013 to 6 million and some in 2018, and then just the year before was at 5.9. It seems to be opposite what we've been told all along, that shared revenues has been coming down in the state.
Well, it was 7 million not too many years ago.
So that'd be previous to 13 then? Okay,
Yes.
so references are usually to, I don't know, 5, 7, 8 years ago, not in the last 5 years.
You're correct.
Okay, thank you.
Also
in here
included
also.
in that number is your LCSA reimbursement, which I believe has been is up this year since from prior year for the personal property tax loss.
Okay.
If you accumulate those numbers that Nikki mentioned, it includes about $300,000 of other revenue that came from the state that's included in the state shared revenue. But overall, the trend has been increasing over the last few years, but if you rewound back to early 2000s, I believe that the number would have been probably closer
Around
to
7 million. Okay, thank you.
And also that, I mean, that stuff is already in here. I looked at it, so it's already spelled out in the report.
Okay, any other questions? Okay, moving on to the next slide for the total taxable value. This slide demonstrates the total taxable value and the percentage change since 2009 for the city. The 2018 taxable value of all properties in the city was approximately $1.2 billion for 2018. Assuming a 2% annual increase going forward, the estimated total taxable value would reach the $1.6 billion mark in 2034, which would bring you back to where you were in 2009. Moving on to the next slide. Here we have the revenue sharing payment history. This slide provides an overview of the city's state shared revenue payment history since 2006. As you can see, there's been a continued increase in the state shared revenue since 2011, reaching $6,090,000 in 2018. The 2019 projections are approximately $6,189,000.
Madam Chair, just to add
Councilwoman
a little
Hicks-Clayton.
perspective. Thank you, Madam Chair. A little perspective with the shared revenue, and thank you, Mayor, for answering that, because you're absolutely correct, and I know it's shared in the report. Thank you, and Councilman Fuzzy, for that note. I will tell you, and I just want to note, through Michigan Municipal League and SIMCOG, Southeast Michigan Council of Government, there has been a lot of activity lobbying in Lansing, which we're all lobbyists for our community. And that's why I think we see this trend changing a little bit. But there's been a lot of work and effort by elected officials to do so. So I certainly think that should be noted. That's part of the conversation that we've had over the last 6 to 7 years. Because what happened was is you had the economic downturn that happened in 10 and 11, which impacted all of the communities across the state of Michigan. So that's what you actually see here. That's what you know, your outline that you have here shows that trend over the years. So I just want to bring that to you. Okay? Thank you.
Madam Chair. Yeah, and
Counts.
I'm sorry, in 2010 is when Governor Snyder took office, and there was one party in the majority in the House, and it became one party had the House, the Senate, and the governor's office. That's when the big slashes were to state share revenue to the statutory portion.
Okay, thank you.
Okay, moving on to the next slide. Here we have the corporate fund expenditures. This slide will just provide an overview of the various expenditures in the corporate fund. The total corporate fund expenditures decreased from 2017 to approximately $42 million in 2018. As was the case in prior years, the public safety was the most significant expenditure of approximately $23 million, followed by the general government expenditures of approximately $10.9 million. Any questions related to the expenditures? Okay, moving forward to the next slide, we have the corporate fund balance. Now, this slide provides an overview of the city's corporate fund unassigned and assigned fund balances, as well as the annual expenditures since 2012. In 2018, the city had approximately $42 million in corporate fund expenditures and total unassigned and assigned corporate fund balance of approximately $6.7 million. There was a slight decrease in total corporate fund expenditures when comparing to the 2017 balance, and a continued annual increase in total unassigned and assigned corporate fund balance since 2012. The calculated percentages are the unassigned and assigned balances as a percentage of total expenditures for the corporate fund. As you can see, those numbers below for each year. And as you can see, these percentages continue to increase, and we're at 16% as of 2018.
One comment, if I can add to the percentages. So the reason we're showing unassigned and assigned fund balance as compared to your expenditures, because the assigned fund balance of $2 million, technically the council can change that assignment and make it available for overall expenditures. So that's why we're comparing it to your total expenditures from that perspective. And at that point, you're around 16% of your annual expenditures. So it's usually like a way of looking at communities and see, okay, where are you at in order to be able to sustain so many months ahead if you didn't collect any property taxes or any major sources of revenue going forward. So 16% is usually within that window where most municipalities want to be at.
Okay, moving forward to the next slide here. We just have another breakout of the corporate fund balance. Here we're showing that the city's fund balance is made up of non-spendable funds, restricted fund balance, assigned fund balance, and unassigned fund balance. In 2018, the city had a total corporate fund balance of $9.7 million. Approximately $470,000 of that is non-spendable. $2.5 million is restricted. $2 million is assigned, and $4.7 million is unassigned.
So the cable TV PEG monies would be classified into restricted, right?
Correct.
Yes.
Okay.
Okay, moving on to the next slide here. We're looking at the water and sewer fund. This slide provides an overview of the water and sewer fund net operating income and capital outlay and debt services. So net operating income for 2018 was approximately $6 million and increased by approximately $3 million from 2017. Capital outlay and debt service has continued to decrease since 2015 and is approximately $2.3 million in 2018. For 2018, we can see that rates are being set and they're appropriate to cover the operations for the water and sewer fund.
Madam Chair.
Councilman.
So in 2018, there was a drastic jump in the operating income loss without depreciation. Can you give me a little more information on that? Why such a big jump over 2017?
So a significant impact for the fund was lower cost of just the water purchases and higher revenue. So those were the largest items that really had the impact. And the goal of this graph too is you can see that some years you fell short on the income versus the expenses, some years on the positive side. If you kind of do a flat line kind of across, you're essentially setting your rates to cover your expenses on a cash basis over the years. So if you kind of looked at the snapshot of the 6 years, you essentially covered your capital outlay and your debt service payments with your operating income.
But if there's a lower cost for the water, the bills seem to be higher, continually go
Per
up.
unit. Like, so if we looked at the water purchases increased, however,
So we're buying more units.
So if you look at the overall cost of the purchases that the city of Dearborn Heights made, the cost overall went down a little bit in the total, not necessarily per unit, but in total.
Okay, so the cost per unit is cheaper now, right?
The cost per unit went up, but the units went down.
Okay, number of units went down. Okay, thank you.
And we're going to meet, I think, in 2 weeks or 3 weeks to talk about the water and sewer budget. So I've already gotten an opportunity to see the preview of the thing, and there's some major projects coming up. So we really, in order to keep this thing cash flow-wise operating, there's still significant amounts of revenue that are needed, correct?
That's correct.
Okay, moving on to the next slide. Here we have the Water and Sewer Fund unrestricted net position. This slide will just provide an overview of the changes in the unrestricted net position of the Water and Sewer Fund. Since 2015, there has been an annual increase in the unrestricted net position for the Water and Sewer Fund. In 2018, the Water and Sewer unrestricted net position is a $305,000 deficit.
Do we have to give a response to the state with the fact that it's in deficit or not?
You do not have to for the Water and Sewer Fund because your overall current assets are higher than your current liabilities. So the state looks at a couple different thresholds of where you have a deficit elimination plan. One is if you have a deficit overall in the fund, then you have to kind of go to a step 2. If your current assets, which mostly are receivables and cash in the Water and Sewer Fund, are higher than your current liabilities for accounts payable, most of it would be for water purchases, maybe short-term debt payments. If your current assets are higher than that, then the state doesn't require a deficit elimination plan.
And that concludes the graph presentation.
Madam Chair?
Councilman Constant?
Martin, do you know offhand in the Tri-County area in urban Michigan, how many cities have a deficit reduction plan or are, on the watch list, let's say, with the state?
So from a deficit elimination plan, if you look at each individual fund, I don't know specifically the number. I know looking at my client base that I work with, I would say about 25% have a deficit elimination plan for a fund or two. Usually what a common one is CDBG, just because of the timing of receipts when they're received. So usually there's a deficit for a short period of time until that money comes in from the grants. That would be a common one. Once in a long while you'll see other funds, but usually that's the one that's most common.
Thank you.
So with that, Nikki and I are going to go over the findings. The letter that you have in front of you that's addressed to the mayor and the members of the city council is broken up into 3 different sections. Nikki's going to cover the single audit findings and what actually includes also some of the findings from the financial statement audit. Anything that's of significance, what accountants term as significant deficiency or material weakness would be in that letter. So Nikki's going to cover that. I'm going to cover this briefly, just to kind of go through the sections. So section 1, which starts actually on page 3, basically is in response to the pre-audit letter that you would have received a few months ago. The letter letter is essentially kind of like a boilerplate letter just to talk about how the audit went, if there's any issues or any disagreements with management, et cetera. So you'll be happy to find out that there were no disagreements or anything like that. One item that I did want to highlight is on the bottom of page 3. It talks about the implementation of GASB number 75. So that's the GASB that we've been talking about for the last couple of years, that starting with this year, you have put the OPEB, the other post-employment benefit liability, on the books, on the full accrual statements in your financial statement. And just to give you kind of the magnitude, I guess, of the entry, so we had to actually restate the July 1st, 2017 fund balance, or the statement of net assets, for that liability. The impact is shown on page 30 of your big booklet, the financial statements. The impact was, the adjustment to the governmental activities was approximately $138 million to the negative, and then approximately $5 million in the water and sewer fund. So that was the impact of GASB 75, and then all the activities since then, so since July 1st to June 30th of 2018, is included in the statements. So instead of having all the impact hit your P&L, the beginning net assets were restated as a result of the GASB 75 being implemented. Well, then on page 6 and 7, we have general recommendations. So these would not be the significant items that Nikki's going to cover. A couple items is water loss. You did have a significant decrease in water loss from about 15% historically to about 8% this past year. So 1, excellent job. 2, keep monitoring it. I know that water loss tends to fluctuate quite a bit. I know the city has been really focused on trying to reduce some of the loss that has been shown over the years, and it has definitely a significant impact on the financial statements, which would be another reason why water and sewer fund had better income this year than in the past. The water loss went down drastically. So basically, you've been able to collect money for the water that you've purchased. You were able to sell it versus just going into the ground, essentially. Manual financial reporting system. So we've talked about this over the last few years. Some of the systems, especially sick vacation, fixed asset software, et cetera, a lot of that is done in Excel versus having a software that maintains that activity and maintains the liability for the sick and vacation, or maintains inventory of your fixed assets. We would recommend, once again, that the city look into automating the process so it's not as prone to the errors like it is currently. And I know the city has been looking into that.
I was going to say, I thought they did.
Yeah.
I think it's actually, the city's in process of changing a couple of the.
We have a new controller. Linda's doing a great job, but this is where it's important to keep that continuity so that we are able to implement and upgrade. But you've been working hard on it in the short time you've been here.
Yeah, I've got the payroll, the first payroll's up and running today for the Friday payroll. So at that point, all of the sick will be in the system, and that accrual will be a lot easier to manage. And in January, after I get finished with the payroll, I'm going to be putting in a request to purchase the software through BSNA to do the fixed assets and have that conversion done by the next audit. Really good. They said it won't take that long. So by the next audit, both of these should be addressed.
Yeah, so it is a big task too. So there's a lot of Excel spreadsheets and just templates, especially for if we're looking at fixed assets. So the next item, talking about capital assets, we also recommend the city do an overall inventory of the fixed assets. And I'm not saying that you have to go and tag every single item that the city owns or anything like that, but it would even help just to give a listing to the department heads and say, okay, do you still have these assets? Are they in the city's possession, et cetera, just to make sure you kind of clean up the fixed asset inventory, especially when you're doing the conversion to the BSNA software.
Council Chair?
Councilman Muscat?
Weren't these notified in the last couple of years the same thing?
Yep.
There's similar findings, correct, from year to year.
So I need to know how, I mean, why do we keep getting the same deficiencies as they've been pointed out to us? And I'm not saying that they're easy to fix, because they're probably not, but I can't see why we've had them for the last couple of years.
Well, in the area of the longevity, vacation, and sick, we were using, and it's a very well-recognized payroll outfit, ADP. ADP and the previous controller received the assignment to try to get ADP to incorporate these items. they could not do it. So Linda looked at other payroll providers and found one that is able to implement this. But ADP told us they thought they could, and John supposedly was working on it, and then yeah, not John. So what happened is he came back, but then he left in December, but he could not get it accomplished. When Linda came in, we went over various items, and this was one of them. And she told ADP, and I think they didn't want to return the calls. They just were.
I couldn't get answers for certain basic questions that I could find that were wrong in the payroll, so I wasn't going to have any confidence in them handling this important information. So then I went out and looked for someone that can, and now we're implementing that.
So
it
that
took a while to
yeah.
go through the interview process.
That's why that happened. On the fixed assets, the answer to that really is to hire a bunch of college students in the summer or some downtime and have them go around and do a complete inventory and then get that listing in the BSNA, and that's our plan to do that. But we couldn't do it last year. I mean, we've had a lot of stuff going on with all the contracts and everything else. Linda has been, we tackled what we thought were the biggest and most important items, and that was the items dealing with the fringe benefits. And once that is accomplished, then we'll go to the fixed assets. But it's not that we've ignored it. We just had a couple misfires on it.
When our assets like trucks, heavy equipment, do we brass tag them or put some sort of tag on them to identify them with some sort of serial number?
What?
How do we do that? I mean, do we take down serial numbers of cameras, movie projectors? These are things that should be done.
Well, the vehicles and some other items like buildings and things are well documented, but it's caused by a different reason, and that's the fact that for our insurance carrier, we have to put a rather significant, and that's the best fixed asset listing we have, is through the Meldigan and Carrero thing, because those all have to be insured, and our insurance agent has assisted us in those kind of things. The items that I'm not sure is well documented, and that's where we will pick these up. I might be mistaken, but it would be like in the fire department, you have the JAWS, and all the radios I know are accounted for both in police and fire, but there are some other items that I think are not tracked. It's not that they're going to get up and grow feet and move, but you're aware of them. But there's a lot of supplies on a fire truck, in a police vehicle, and those are the things that we'll be picking up.
Okay, thank you.
Okay.
Last couple items, a general ledger at the very bottom on page 6. We noted there was a couple accounts and they were very insignificant, so a couple $1,000s each. The balances haven't changed over the years. We would recommend the city take a look at those and see what details behind those. Perhaps they need to be adjusted. Not necessarily, but perhaps they need to be adjusted. And then the last item on page 7, the city police and fire pension system uses an old actuarial mortality assumptions from 2014 and 2017. Those mortality tables actually have been updated, so we recommend that the analysis and the actuarial analysis be updated going forward to the 2017 tables. Now, looking at that when we were doing the testing, it didn't have a significant impact on your liability, but it could over time, so we just want to make sure that the tables have been updated next time you receive an actuarial analysis.
Madam Chair.
Councilman.
So for the mayor, so who takes on the responsibility, Mr. Mayor? I mean, I know in general, obviously, that administration is a total, but is there somebody specifically assigned for item? Because like Councilman Muscat mentioned, you know, we went through these obviously in previous years. Is there somebody specific? Is it usually the controller? Is it the treasurer? Is it, you know, you? I mean, who specifically is responsible? At the end of the day, it'd be you, obviously.
Yeah.
At the top. But do you have somebody specifically assigned for these things that are of concern to be able to implement the, you know, the fixes, so that we don't have to deal with this? Now, I'd imagine, I assume, Martin, you could attest to this, most cities have little issues here and there. I assume it's pretty common. Is that correct, or?
Correct. I mean, some of these findings are going to be very similar to
a lot of other
audits that I'll do. Some of them are unique in nature, but none of these items that are listed here we would find that are significant. That would impact your financial statements in a material way.
But at the same time, it would have our finances in much better order, obviously, if somebody's assigned to take care of these. So I'm just trying to make sure for the mayor's department.
Yeah, what I do is I take all the audit adjustments personally, because one of the things, I used to perform the function they did, it was many years ago, but nothing was more, I'd say, insulting than to go back to the client second year, third year. I mean, I worked in the profession for 4 years at one firm. So I went through, and in fact, I did 2 internships in Dearborn. So some of these clients I had for 5 years. There was nothing worse or insulting than to give management, like, hey, I cited this 5 years ago as an auditor. Why isn't anybody doing it?
Well, that's what I'm asking.
So that's why I personally, and in my office, Stephanie has consistently put together kind of a to-do list, and then I review that. So when Linda came in as a controller, we talked about the findings from the previous audit. And in fact, because one of my hopes is that we could eliminate, and I think somewhere else you probably talk about, but I just as soon get to a point, at least I used to do it when I was in a controller capacity in a couple of jobs that I had, that used to burn me if the auditors came up with an adjustment I didn't catch. I felt like that was a deficiency for me personally and my staff. So we would like to get that to the point that they're doing what they should be doing in auditing and not doing post-closing. And I don't want to take shots at the previous controller, but that was the biggest disagreement he and I had, that I felt he was leaving a lot of the work to them, when in fact I saw that as our work in the controller's office. So Linda and I have the same philosophy. There will always be, in my estimation, or most likely be, an audit adjustment, because, for instance, like internally, Linda and I have had a lot of discussions, and we've had discussions with Martin and Nikki and all of them, as it related to how to properly record the golf course purchase. And when you run into unique items, we're going to have to get some degree of guidance and kind of be a team as to what is the proper way to approach it. It's not an entry that you make every day, and we had some strong feelings one way or the other, but we wanted to make sure at the end of the day that it is in accordance with GASB, because we don't want a modified opinion. So like I would expect you could have something in the future dealing with golf course till we have a clear understanding of how to do all that accounting. So that's, I hope I answered the question.
Yeah, if I can just add a little bit, I'm going to steal Nikki's thunder a little bit when she's talking about some of the findings. The entries that we discovered this year that needed to be posted to make the statements materially correct, there were less in number than last year, so there was definitely an improvement. The controller has been in the office for approximately 6 months before the year end, so not even a full year under her wings. So we did see an improvement from the year before. However, the ultimate goal would be to have 0 audit adjustments. Something as a golf course or any unusual accounting treatment items that perhaps need to be discussed with us in order to get posted correctly, or we can do some research on and get back to the city. Those items normally happen throughout the year. That's not at the end of the year kind of a finding or an adjustment. Usually, anytime, quote unquote, an audit adjustment occurs is when we receive the final download and we find errors in some of the numbers. So if a bank reconciliation doesn't agree with the general ledger, well, that's an adjustment that needs to be posted so that way your statements are presented correctly. I'm not saying that was the case here, but just giving as an example. So from that perspective, the records need to match what the true numbers are. So that's why some of those adjustments were made. But throughout the year, if we're recommending any adjustments, just from the perspective of having the conversations and making sure that we know what's going on in the city, and the golf course would be a perfect example. Those technically would have already been posted as a result of those conversations, so it's not really a year-end audit adjustment per se.
Okay.
But, to be honest, there are few clients that I have that we would not find any adjustments. So there's usually a handful. It could be just because the records came in late from an outside party, and that's why it's posted, because the audit happens in September versus if it happened in December, I'm sure all the numbers would be already tied up because you'd already received the numbers. So some things will happen naturally, but usually those might be 3 or 4 entries versus the amount of entries that we had.
Thank you.
The last section, Section 3, is legislative and informational items. I'm not going to go through page by page. These are basically for your enjoyment of reading, quote unquote.
Yeah, right. Google had a workout last night and today.
So on page 9, I did want to highlight revenue sharing. It is projected to go up once again next year, as we talked about a little bit in the graphs, which is important. The revenue sharing is still lower than quite a few years past. And then also, same thing with property taxes, as Jake mentioned. It's important to note from that perspective, because we're just looking at absolute dollars. But as you know, inflation occurs, so we're not adjusting the numbers with inflationary adjustment or anything like that. But unfortunately, your expenses have been going up. So it's definitely very important to note that the city has definitely been working very hard in order to manage, stay within your budgeted numbers and making sure you make the cuts where necessary in order to stay within your means. And the city's been doing a nice job of doing that, as you saw in the fund balance. The fund balance in the general fund and the corporate fund has been increasing over the years.
Martin, a quick question. I discovered in Lansing they are going to record, because of the recent Supreme Court ruling dealing with Nexus on purchases made by corporations that are outside Michigan, and that only 3 states included, and this affects our state shared revenues because under the state constitution, a certain percentage of sales taxes have to be remitted back to local communities. Now, I discovered the fact that because that ruling just came out, there's only 3 states in the country that have recorded that expected revenue, which is in the millions of dollars for each of the 3 states. That was Illinois, New Jersey, and Michigan. And my question is that when we go into the next budgetary cycle, I'm a little bit concerned to bring in that amount of money, because we really don't know how much the state is going to get in only 3 states. But when we go to the website and we get a number for state shared revenue in next year's budgetary, I think it's going to be inflated. I'm not sure we're going to get an extra $38 million in Michigan from those proceeds. In fact, I tend to agree more with the other 57 or 47 states that didn't include it. I don't know if you're aware of that, or have you?
So I've heard about it. I know that there's been definitely changes in how Nexus is looked upon in most states. There was a significant case recently, a Wayfair case. I don't know if you've heard about it. Basically changes how states are supposed to collect state sales tax, etc. So there's definitely been significant occurrences over the last, I would say, 6 months. However, I would always say the same thing as I guess I've said for the last few years from the perspective of looking at state shared revenue. I would always be very cautious when you budget for it, because you're really not sure what you're going to get until you actually get the check. I would say same thing as for reimbursement for personal property taxes or even property taxes themselves. There's a lot of fluctuation overall. People keep talking about recession coming. Who knows if that's 2 years from now or 20 years from now, hopefully 20, but there's just a lot of unknown, but I would make sure you're cautious as you're budgeting and keep checking. The state does update the budget or the proposed revenue sharing amounts, so I would keep checking that on a regular basis, especially when you're doing amendments for your budget.
Thank you.
And then the last item that, which we've talked about at previous meetings on page 11 is Public Act 202, especially when we're talking about OPEB and pension plans and the funding levels. So we've talked about the funding level for OPEB, which is on page 12. Minimum is 40%, which I know the city's looking through the plans in order to get to that level. And then the pension plan is minimum is 60%. So I just wanted to make sure we kind of note it in here and give you the guidance that make sure we put it in here. So that's all I had on the letter from this perspective, and Nikki's going to go through the significant findings right now.
Councilwoman, if I may, just to follow up on the Public Act 202 and requirements of that act. Thank you, Mr. Abdelhak, for sharing this with us. And I just want to ask, Mr. Mayor, what the plan is with the corrective action plan extension that was granted, it looks like. And the corrective action plan is due on December 28th, 2018. And the various requirements according to Municipal Stability Board as outlined in the corrective action plan development best practices and strategies. Will we be scheduling, and this may be for you as well, Madam Chair, a study session to discuss this and work out through that action plan as required by the Department of Treasury before that date, I imagine?
Yeah.
We only have one more meeting, of course,
well,
right?
Well, the council chair and I talked because this is coming up now. Here's kind of the key. On your agenda tonight, item, there's a request by the Human Resource Director for an agreement with Nyhart for the interim gas 45 report. Right. Approving that will get us the numbers, correct me if I'm wrong, Elizabeth, but will get us the numbers to be able to subdivide our liability to police, fire, water and sewer, and library employees. In addition, it's going to give us the data that we need to for a contribution amount, correct?
It is. So, yeah, we have the GASB 75 number, which we used to call 45, so that there's a little glitch in that title of what the contract is. And so we're working with Nyhart, who has done our GASB 75 and 45 in years past. They have all of our data, and they're in a position to help us get the one requirement on that corrective action plan, which is related to the actuarial valuation to understand that 40% funding. So as soon as this contract passes tonight, they're actually working on the numbers tonight, and they can give us a draft at the end of this week, and then we can, I would hope we're in a position to have a study session even on those numbers. We've been working with Brian from Plante Moran. Alicia had come out at one point too, so we could get kind of our team together. And I don't know, I guess whatever the council chairwoman would like to do.
So if we didn't have the Christmas tree lighting, we would ask most likely that it be on for next Tuesday. As an alternative, we have already talked to the chair about either a Monday or a Wednesday to cover that and a couple other items, because this has got a very short date to it, and the legislative body has to approve it. And so we have outlined from a couple different things, and we can get into more details when we meet. But we have had the opportunity to look at some other communities in their reporting, and I think we know where we need to get to and how to get there, and it's just a matter of providing it. But the actual numbers, you can't just give the state, well, we think this is good. We had to come down and get an actuarial report as to, so that they knew that, yeah, these numbers have some real professional substance to them. So that will come into play, and it basically is going to need to get approved by your December 11th, if that's the date, meeting. And so we want to get on the item, but we started meeting, and then we found out we needed to get these numbers in a different direction, and so consequently, but Brian's been very helpful in guiding us too. We also, I think, didn't we get 2 or 3 other communities and what they reporting?
True, and we got a very accurate, what we feel is very accurate, thanks to even our auditors at Plante Moran. We get that round, and we went through multiple drafts of GASB 75, so to get that 165 number, which it was 168, so yeah, Nyhart's been great, Plante Moran's been great, and really feel comfortable about that 165 number.
Thing I will add is we cannot do what Dearborn is considering doing, and that's bonding. The other thing, I went to a lot of seminars in August and September. In fact, the treasurer, I'm glad you notified me of the one, because that was excellent. And I got a chance to talk to people, and I'm not going to be critical of our neighbors to the east, but I heard a lot of negatives in regards to bonding for this liability from Oakland County, people and others. So I think ours is going to be a logical. The other piece is our corporation counsel's got to set up the trust language, and so we've been urging him because we'd like to get that on the December 11th agenda. And I talked to him just again today that is necessary, and we're all on his case about you got to get this done because the state doesn't want, we've been told, don't tell us what you think you're going to do. We want you to actually start implementing, showing that your intent is to actually do this. So that's where we're at. Council Chair?
I have a follow-up though, Maya, please. When you say trust fund, you're talking 115 trust fund. Is that correct? Am I misunderstanding? This is the Act 345 because we had talked about that.
No.
And I was reassured that was moving forward.
I can't. Is it?
It is. So, yeah, so, but we need one for general government too,
Yeah.
so.
Yeah, because it's going to be bifurcated into police and fire because of the fact that you don't want to commingle 345 monies with any other. So in essence, there'll be two trust funds and the money segregated, one for 345 and the other one for everybody else.
Okay, Councilman Muscat?
On page 12, I guess it speaks in the event of local unit has underfunded plans. We keep going down in the last paragraph there that, is this what you mean, Mayor, about the actuary coming in and to calculate our number in order for governments to comply? Is that, I mean, they spelled it out here.
Yes.
Is that what we're discussing here?
Yeah, you got to get a professional actuarial.
And what are we? Do we have the company that usually does that? Our normal? Yeah. Okay.
It's not the one that we use for pension. This is a different company.
Okay.
And they will do the healthcare analysis work that we need for this legacy cost. We would still continue the pension ones for the pension, but under the pension provisions, we more than satisfy the state requirements. So we're exempted from all the additional things because our funds are already well over 60%.
I had that highlighted there.
It's just the health care, which we were on a pay-as-you-go basis, which is what everybody else was, too.
Madam Chair.
Councilman Constant?
Martin, because of the new accounting standard, showing the funding for the legacy costs, that's over a 30-year period, and that's something all the cities are facing?
It's the same time period, and it is 30 or even 40-year period. Correct. So it's not that you don't have to get to that 40% funding overnight. The state says that they'd like to see a plan that you get to that funding level. It's either 30 or 40 years.
30 years.
Is it 30? Okay.
So,
and it's 20 years, I think, for pension.
It's not really to say it's an unfunded liability. It's a new liability that we have to show on our books, but it's not an unfunded liability.
It's a new liability shown on the books, correct. So GASB 75, so historically for as a GASB 45 that was preceded the new standard, you had to only record a liability if you weren't making contributions based on what the actuary says you should be contributing or you could be contributing in order to fully fund that liability over a 30-year period. So that's the only time you recorded a liability. If you did the pay-as-you-go, you recorded a small liability, but it wasn't anything, it didn't accumulate to the full amount that you'll owe at the end of the day. GASB 75 requires every community to record the full liability as of the reporting period for that liability. So it's definitely a different, it's a change in accounting. It basically puts the communities, the governmental accounting financial statements based the same way as for-profit companies have been doing for years.
Oh, okay, that's interesting. Thank you.
One of the interesting things, the Oakland County, my friend over there that runs the show for Patterson told me that, because he was on the state committee that Snyder put together, is that while the state's requiring all the governmental units, counties, cities, township to fund this legacy cost, the state of Michigan isn't funding the teachers or their own unions' legacy costs, which is in the billions. Just an observation.
The whole idea, I guess, of recording the liability is you're recording the liability, the cash is not due yet, but the employees have worked. So based on the service period that they've already worked, that liability exists for the community. So for the accounting purposes, for full accrual, that full liability should be recorded, even though technically the city does not have to pay it for another so many years until the employees start retiring and start collecting on that benefit.
And then going forward, the pensions are going to become more and more a thing of the past, so it's going to be, it should be less and less. And with the pool of city workers over time with, you know, automation, different things shrinking a little bit, that number should be trending down. Correct?
That's correct. And a lot of communities, and not just communities, but for-profit businesses are going away from the defined benefit to a defined contribution. So just essentially a 401k plan that the employer ends up contributing X amount every year. That amount goes away, technically, goes into the employee's account, and there's no liability for the employer at that point. So some communities are doing that. A lot of businesses have done that over the years, and I think that trend's going to keep going in that direction from that perspective, and that pension liability is going to keep decreasing as a result.
Thank you.
That's it. Okay, thank you very much. Oh,
one more.
We have one more report to go over. We know we gave you a lot of stuff. So the one we're going to go through is titled Federal Awards, Supplemental Information. So because the city has a federal awards audit or a single audit, your findings are detailed in a separate report. So there were 4 financial statement findings this year and 1 single audit finding for federal awards. So we're going to start on page 9 of this packet. So the first finding is a repeat finding from prior year for the journal entries identified as part of our audit in order for the financial statements to be materially stated. The adjustments were related to accounts payable, grant activity, capital assets, deferrals, self-insurance, pension, debt, OPEB, and fund balance, and spanned across various funds. There were also adjustments that we identified that the city concluded they were not significant, and we agreed with that, and so that we passed on them. But those entries are included in the end of audit letter that Barton just went over.
Are those the ones in the back of the book?
In the very back, yep.
Those, okay, because I had a note here, I wanted to know what they were.
Yep, they didn't rise to the level of significance to be recorded for the financial statements, but they were identified as part of the audit. They're not significant to the statements, and so they were passed on. But we still want to bring them to your attention.
How does something like that happen? I mean,
Well, there's no way for me to answer without putting a finger on somebody, on an employee.
I'm sorry to put you...
It may not be appropriate to, you want to answer that? I don't want to get in trouble with other departments and other elected officials.
So the past adjustments, I would say that's probably the most common thing that most organizations end up having, because if it's a small enough dollar amount, the organization decides not to post that entry in that fiscal year, just kind of post it going forward, because there's a lot of things that have to be adjusted and reconciled and so on, that it's more of a burden to record in the historical statements versus going forward. Most often, it's items that could be essentially maybe a cutoff. So you received some goods at the end of the year, you did not record that liability, you just recorded the cash outlay and the expense in the following period. It could be a small payment, a couple $1,000s. So instead of just, okay, reopening the books and posting it as of June 30th, 2018, you say, you know what, let's just leave it alone. It's recorded as a 2019 expense. And overall, it's still a good snapshot if you roll forward. So the transaction is still recorded. It just wasn't kind of backdated to the previous period. So it's more of it's usually adjustments go from one period to the next, that the community decides that it's not material enough to change anyone's opinion of what your financial position is based on the financial statements that are in front of you. And you can see that the dollar amounts are more than a couple $1,000s. I believe one adjustment is like $50,000 or something like that. But if you look at $50,000 in comparison to your overall statements, it's not a significant item that would impact someone's opinion of what the financial position is of the city. So
we had 3 of them, didn't we not?
Yeah, well,
14.
a couple of them deal with personal property taxes that
Adjustments,
should have been
14.
long-term rather than current.
Correct. So that's just a current versus long-term presentation, so that has no impact on your bottom line, on your income. There's another adjustment that you've actually had, I believe, let me see if I don't want to misspeak.
Workers' compensation.
Workers' compensation. So I think you actually over-accrued the workers' compensation liability versus what the final numbers showed. So instead of booking the liability, you decide, okay, let's pass on it. Maybe we'll record it next year, or maybe that liability is going to inch up again, so we'll just keep it at that level.
All right, thank you.
Thank you.
And so, as Martin pointed out, even with the turnover in the comptroller's office, the number of entries that we identified during the year was about 14 compared to 35 last year. So there was a reduction. But still, we recommend that the city continue to implement controls and procedures to ensure that accurate and complete financial information is being generated, especially for these year-end entries that are only done once a year. So the next finding, the second finding is a partial repeat finding. So there's really 4 components to this one. So if you look at in the middle of the context, the first 3 are related to charges between funds, and these have been the same for many years with no basis to support them. So we recommend that the methodology be revisited. So that would be the allocation of insurance and retiree health care expenses between the corporate fund and the water and sewer fund. There's an annual fee charged to the police and fire pension trust fund, and then an annual fee is also charged to the library for services provided by the city.
Madam Chair.
Councilman Abdullah?
So when I read through this, I had a question. I mean, it seemed there was an annual fee and you felt it was not appropriate, but what is the dollar figure? It doesn't say the dollar
Which
figure.
one?
Well, this is on page 10.
So the annual fee charged to the police and fire pension trust fund is $35,000, and the library fee is $150,000.
Let me clarify too, it's not that we felt that it was inappropriate, it was just not justified necessarily. There was no formal calculation that's performed. The fee actually looks reasonable, but it could be that the corporate fund is not charging enough. So we just want to make sure that the number is substantiated and calculated. It's more of a concrete calculation versus an estimate.
So there's some other basis to support the number that's being charged.
Okay, thank you.
So the last piece of this finding is new this year and is related to parts and inventory that are paid for initially by the water fund and then are either not timely allocated to other funds, or there isn't adequate documentation to support the charges that are allocated. And during our testing, it was identified that there's one person who's solely responsible for those allocations, and this person was on medical leave for a large part of the fiscal year. And so we recommend that a process and a thorough review process be put in place to ensure that these allocations are done timely, and that if someone does leave, it's done consistently.
And you're referencing page 11, correct?
10.
10. You're still on 10, okay.
10 and 11.
Could I have a question on
Goes on
11?
both.
So one comment too on that allocation on the person being on medical leave and cost not being reimbursed timely. The city did record an accrual, so the liability between water and sewer fund and the corporate fund has been recorded, so the water and sewer fund owes a little bit of money to the corporate fund as a result of the reimbursements not occurring until the 2018 and 19 fiscal year. So that liability has been recorded. However, for months there was no reimbursements done because the individual was out of the office. So whether it's having someone else that's responsible as well in case there's one person that's not available, or maybe changing the accounting procedures so that way if there's an expense that the city knows that doesn't belong in a certain fund, just record in the previous, the fund that it belongs in, so that way you don't have to worry about the allocations.
So then moving to page 11, this third finding is related to incompatible duties. So certain individuals in the treasurer's office have the ability to initiate and approve a wire transfer, as well as add a new vendor into the system. And during our testing, we didn't find any issues, but the ability is still there. So we recommend that controls be implemented to mitigate this risk and that 2 people are always involved in those functions.
I'm sure.
Councilman Abdullah?
So I had a concern about that. I had a star next to it here when I read that. I don't know if is there a cap on the amount of the wire, or Is there any type of like limit? Because that kind of concerns me that one person in any department, not talking about any department, can just wire money based on a vendor, because it leaves it a little bit open to potential fraud. Hypothetically, I'm in that department, I have a friend vendor, and I wire, $25,000 from the city's monies to my friend. I'm not gonna name specific cities, but as we all know, some people are in jail because of that in cities near us. And all over the news, which is obviously not good. That really concerns me that there's no checks and balances here on something like this, especially with a wire to a vendor that could be, again, a random vendor, and the money's gone, and nobody's here to check me if I'm doing this, and, at the end of the day, it's all gonna balance out, but if nobody knows who that vendor is, nobody checked it, again, no checks and balances, it's gone. This one when I read this concerned me the most, honestly.
I guess I'll speak up because it's my department. We've already put in implemented dual system, whereas if I do the implementing the wire, it has to be checked by my assistant or somebody else in the office. If she were to do it, it would have to be checked by me or somebody else in the office.
Is there any type of,
Dealt with.
and I know you're very honorable and well respected, no doubt about it. But so again, as I mentioned, for any department, not just yours.
We're the only ones that are wiring money.
Right. So with that being the case, John, is there a cap on this? I mean, is there any type of?
Well, so a lot more.
Like in other words,
a lot more stuff. This stuff is done on the computer, and we have procedures to cap those type of things. I don't know. To where we have repetitive wires, we set up repetitive wires so that we know when we pay the school district by wires all the time. So we have their information in there. It's set. We know they're getting it. So then, like we can do that to the school district, and we know it's only going to the school district, and there's a cap on it. And so that's an example.
But the vendor one is that concerns me the most.
I mean, we don't. Well, I mean, I'll call that, I won't say vendors, because we call that non-repetitive wires. So again, a non-repetitive wire would require myself or the deputy to initiate it, and then another person in the office to approve it. And so, we would know.
So that's to a new one, hypothetically.
Yeah, that's be somebody who's.
Company XYZ that you've never dealt with.
Right. We don't do that many wires. I mean, we do wires like investment wires, but more of them are on the repetitive end than on the non-repetitive end.
Right.
Okay. And so what we try to do, paying Central Wayne Sanitation Authority, you see those invoices. We do that repetitively.
Right.
School districts, we do that repetitively. Wayne County, but there's a few like we started buying the houses on Hanover. That's not something that's going to go on forever. When that's done, it's done. So that's a non-repetitive wire. We do it, but like on some of those, which they were tracking, one was initiating and the same person was approving the money to be sent for the Hanover houses. And so now it was all just to check the box on the form. We had to redo the forms exactly as they were, check them, call back somebody other than the initiator to confirm this wire.
Good idea. Thank you.
Okay, and so that has been already implemented.
Yeah, that's concerned me the most out of the stuff I read.
Just to reiterate too, is like from a control perspective, our goal is to, and I don't say that, I guess but just in general, any community's goal is to make sure you have 2 people involved at a minimum. So before it was, as the treasurer said, the same person that initiated a transfer could also approve it, which if you're making a transfer to an unauthorized party, you can approve it yourself. And
right.
So we did test transfers throughout the year to make sure no inappropriate transfers occurred. So that was our first step to make sure that nothing happened that was wrong. And then from that perspective, or at that point on, we discussed with the treasurer and said, okay, how can we fix this control to make sure that you don't have any problems going forward? You would find it from the perspective of when you do bank reconciliations, you would find that the money's missing. The problem is when you do a bank reconciliation, it's not done immediately right when the transfer occurs. So if it's done even 2 weeks after, that person could be gone living on the beach somewhere. So we just want to make sure that the controls are in place. Again, we didn't find anything wrong as a result of our testing, and based on discussions with the city, that control has been corrected.
Great, thank you.
Thank you.
So the fourth finding is on page 12. This is related to CFA completeness, so the schedule of expenditures of federal awards. is on page 6 of this report. And during our audit, there were revisions that were required to be made to it in order for it to be complete and agree to the underlying accounting records. So we recommend that procedures be put in place to ensure that the CFA is prepared accurately and completely agrees to the accounting records for federal expenditures. Page 13 is the last finding. So this one is related to the single audit. So during the year, we tested 2 major programs as part of that, the FEMA grant and the SAFER grant. And we had a finding related to the SAFER grant for firefighter wages. And so during our testing, it was noted that costs that are requested for reimbursement didn't actually reflect those costs that were paid to employees during the year. And so it didn't seem that there was a review process in place when reimbursement requests were being made. So we recommend that a review process is put in place to ensure that accurate requests for reimbursement are being made to the granting agency.
Thank you very much.
Thank you. If you have any questions or anything like that on any of the findings or any of the information that was presented to you, we're happy to address those now. We're happy to meet with you afterwards. We're happy to meet one-on-one, whatever is the best approach that you would feel.
Okay. So in between now and the next audit, and I know the mayor mentioned, and by the way, my standards are going to be higher for the mayor than probably for another mayor being a CPA. You know, obviously,
Yep.
I assume this is, you know, you're all over something like this. But between now and the next audit, I know administrations do everything they kind of try to implement this stuff, but what about in between? Do you guys have checks and balances to follow through in between now and, 12 months from now? What the status is on some of these recommendations, or is that not a part of your responsibility?
Well, technically, it's not a requirement. We're happy to come in and see, what's been done. If you'd like us to do it during the period sometime before the next June 30, 2019 audit, we will make sure that we test the controls that we have findings on next year, no matter what. But we're happy to check those throughout the year if you'd like us to.
So at this point, then it's probably more our responsibility as a council to make sure there's accountability.
It is from the perspective of addressing the items. However, like I said, we're very happy to just double check and make sure that you're comfortable with where you're at.
Sure. Thank you.
All right, and let's, we're over time.
Okay, understand. I have 2 questions. The first one goes back to financial report, page 12, the government fund balance sheet, just for clarification. And I know I sat down with our treasurer who explained things, but just for a public record, a brief explanation. The funds, the restricted funds, like cable peg, Act 345, what happened? We see where there's balance left over, right? What happens to that? Can we have a brief, quick 411 on that for public record? And then I just have one more question, Madam Chair. Do we have anyone that can answer that?
Yeah, I'll defer that. I mean.
Okay. I'm good with whoever. Because there is, it's approximately $2 million every year, right? Yeah, the restricted funds.
So, like one was the one talked about earlier is the cable revenue, and that's can only be used for cable revenue, right?
Understand, yes.
Okay. Transportation, that's the money they get from SMART, they use that for senior buses, and I think they give out free busing tickets, so that has to be.
Yeah, and I appreciate the explanation breakdown, but my question was more, and I apologize, my question is more, what happens to the remaining that you see in the fund balance in the balance sheet? Because you're looking over the course every year, by June 30th, there's you add those all up, you're looking at, anywhere from $2 to $2.5 million over, and you go over the years. I have records from 2016 forward, and I can go back further. My question is, what happens, because it is restricted fund, what happens to that? That's my question. For clarification, please.
Well, on the sanitation and the Act 345 levy, while they have positive balances, and when we do the budget, these numbers are incorporated when you are given a recommendation to set the millage.
Right.
So what happens is the millages, and I propose a budget to the council, and I'm required by charter to do it before April 1st.
Right.
Well, there's like one quarter that we don't have all the actual numbers. So we're coming up with an estimate of what we particularly need. The thing like in the Act 345 levy, it affects numerous individuals different ways, if they're in the drop and other things. So we come up with the best estimate. But that number, these amounts for Sanitation Act 345 can only be used for the purposes. Right. So what you would not want to see, let's say that next year, if the Act 345 number, rather than being 493, was 987, let's say, well then we're doing a bad job of coming up with an estimate because we don't want to overtax. In the same way with the sanitation levy. So those are restricted funds that cannot be used for any other purposes than what is inquired in here.
Okay. And I fully appreciate that because I agree that's restricted. So the last question I have is, Madam Chair, if I may, please. The last question is, with the new website, the old audit was removed or it's not back. This one, I mean, I would hope that would have remained, but I understand there's a new website. When do we anticipate this one being added to the website?
The thing that the council needs to do is accept this audit report, and I don't know if you can do it in connection with your proposed fee I put on the agenda. So you are at 12A for the renewal. If you would entertain a motion to accept the audit report and permit us to forward it to the state of Michigan. Concurrent with that, we would put it on the web. And I think that's what's required, correct?
Yes.
That's correct.
Enough.
And what happens is when the council approves the report, Plante Moran will actually submit it electronically to the state for you. So this makes it a little bit easier. And we've provided the city with the electronic copies of the financial statement as well, so you can post that on the website.
And that's what we would do, but not until this body approves.
Correct.
Yeah. All right, thank you.
Madam Chair, I also like to thank your team. I know Nikki spent a lot of time with me going through most of this, and Leisha also. So thank you so much for spending that time today as well. So your team has been very helpful every time I call to ask questions. Thank you.
Thank you very much.
Thank you very much.
So I do want to say thank you to the whole city. I know it's a tremendous effort to go through a financial statement audit. We were here probably physically, I'm probably not exaggerating when I say a couple months. I think with every week going on, we had questions like, are you still here? Yes, we are. We do dig in a lot of records, and it's. I know it's very taxing on a lot of folks. I know the controller specifically, but I know the treasurer, and there's a lot of people that are involved. HR director was definitely pestered by us a lot this year with GASB 75 being put in. So it's definitely a tremendous task given everybody already has a full-time job. So we do want to say thank you to all the cooperation that we received, and we want to say thank you just on behalf of the whole team for having us part of being able to perform the audit.
Thank you very much.
Job well done.
Thank you.
Yes.
Do you want him to stick around since you have the fee renewal on the agenda?
Yeah.
Yes, I was planning on staying.
Okay, great, thanks.
Thank you.
Okay, next on the agenda, we have Warren Valley Golf Course Consultant discussion.
Yeah, if I might, Jim, you're here, and so if you want to come forward, and Eric, who is the operator currently, you can come forward too. And the reason I looked for a consultant is I'm not sure we have the expertise in the city to know the proper way to plan and operate the golf course. So Jim came highly recommended, and so I asked him to come and kind of interview with all the council members and myself and ask him for a proposal. But he has operated golf course and banquet facilities, I think with City of Dearborn and others. And Eric is here also. I don't know if the two know each other, but Jim is here to give us a little presentation of what he could do to help us come up with a plan for our purchase of the Warren Valley Golf Course. So Jim, nice actually seeing you face to face. We talked on the phone a couple times, but I have not previously met you. So tell us what you can do for us.
Thank you for the introduction and saying nice things. And Eric, good to see you. I've been in the business for 50 years. Owned, operated, managed, consulted many aspects of the business, and I am very familiar with Warren Valley, the history. Have visited the property within the last 2 hours, and spent some time out driving around trying to look at the standing water on the property. But I guess we would attack it in about 4 different ways. The food and beverage aspect with the 300-seat banquet facility, we would approach that. The administration of the property, we would approach that. The maintenance of the property, and the golf operation of the pro shop, and take a good look at all aspects and try to mesh them together and have a success story. The 36 holes and the 300-seat banquet facility is unique to the west side of the city, Detroit, Dearborn, etc., and should have a lock on all of the big business on this side of town, outings and so on. And it's a great opportunity for you. I watched when the county operated through the road commission or whatever they were trying to do, and never understood it, but I think you have a great opportunity to turn something into a jewel. And the golf course is a big part of it, but the building and the clubhouse is the other asset that's present. And they're 2 different types of businesses. The golf business and the banquet business are very different. So we would appreciate the opportunity to work with you.
How do you use your fee arrangement? Do you have a one total cost? You work on a per diem, per hour basis, or what would we receive in a contract?
We would ask for a retainer, and at the same time an hourly basis after that. We would like to be involved for about 6 months. I'd like to see how it operates, live it and breathe it, and be a part of it on that basis rather than coming in and just interviewing the management people and the people that are running it. We would like to be a part of the actual thing. I think your directive is for the 2019 season, at least talking with you, was to keep things in place and operate it as is, and we would observe and report back to you.
Does council members have questions?
Councilman Muscat?
Have you spent any time at Warren Valley, like touring the building?
Yes, I think it was about 20 years ago.
Oh, not recently?
No, I looked at the new building tonight when I went out there, and the county bid it 20 years ago, an RFP, and everybody in town looked at it, so, including ourselves, and just because of 36 holes and the facility.
But you haven't been inside?
I have not been inside. I probably was in the older building.
Yes.
Yes.
Yeah. I was just wanting to see what you thought of the building as it stands today.
That would all be part of it.
Madam Chair.
Councilman Bazey's next, then you. Councilman Bazey?
So when is this process supposed to begin, like for you to monitor? I mean, right now, and obviously nobody's golfing, but the banquet.
They should be eating.
That's what I mean is, are you monitoring this? I mean, when are we going to begin this process?
What I'm going to ask him, if you all agree, is he give us a proposal, and then I put it on the next agenda. If you approve a contractual consulting agreement with him, then he would start in conjunction with that agreement with us.
Yeah, I felt that May and June were important, and the 6 months we'd work would January through June, and longer if desired.
Okay, Madam Chair. So with that, the reason why I asked that question is, I mean, obviously, I mean, somebody spoke very highly of you. But I think one of the things that I requested at the last meeting is we need to see like a resume or some credentials.
I got it in the bag.
Okay.
Yeah,
So
I'll leave them tonight.
Yeah.
Thank you. Thank you.
Yeah.
So that's one of the things is, I mean, anybody can come back and say, you know, I've done this, but would like to see some of the progress report, basically what you have done in the past. And also, the mayor mentioned the fees. I mean, that's one of the biggest things that I'll be looking for is the credentials and also the fees. I'm sorry?
The fees will be important to us, too.
Yes, exactly. Thank you.
Yeah.
Councilman Abdullah?
So, Jim, I got a couple questions for you. First of all,
yes, sir.
If you could tell us, I know you mentioned you have your resume, but if you could tell us at least verbally for right now, what are your I'm going to tell you bluntly what one of my concerns is at this point we have one choice to choose from, and with due respect to you, I'd like to see 2-3 choices. But for right now, we'll talk with you. What successes do you have? I know we haven't seen your resume, but what successes do you have in the golfing industry within the last 10 years that you could tell us about, where you took a golf course from X and brought it to Z? Is there any that you could tell us about locally? I know you mentioned Camp Dearborn, or the mayor mentioned the Camp Dearborn.
My background, basically, general manager at Birmingham Country Club, general manager at Great Oaks Country Club.
Can you tell me the rough years, if you don't mind?
They're outlined in the resume, but the write-up, but that would be 70s and 80s.
Okay.
And been involved in about 40 properties in Michigan and the Midwest.
And what new ideas do you bring? One of the concerns we've got, I think now we can say it publicly, we got one hell of a deal on this golf course, okay? We're closed now, so too late for them. So with that, what new ideas do you have? Because it's been run, it's been operating for a long time, but what new ideas can you bring, do you think, to the table that you have in mind, at least right now, that can take it to the next level as far as revenue? Because one of the, we want to make sure, obviously, we're not only providing a service, but we're creating revenue sources from the golf course.
Golf business is a very difficult business right now. Very difficult. And you have to be astute with social media, all of those techniques, marketing, selling. The easiest thing in the golf business right now is golf leagues. If they come to you, they have plans to play once a week, and they play once a week. You have to go after the outings. You have to go after all of the business. The weekday business is all seniors, and the total aspect is just marketing the property. And you have a property that's got Donald Ross written all over it, and 36 holes, and I think you have the opportunity just to market it on that basis, that it's that good.
And one more question. In regards to the banquet facility, I'm trying to remember the number. Quote me if I'm wrong. I thought it was like only rented out 7 times this year, or some crazy number.
Eric is here. So how many rentals did you have last year? Although the county, in fairness to you, didn't let you market.
But in the last 12 months, how many times has it been rented out, the banquet? I heard a number of 7. I could be wrong, but
the number 7, I think you and I spoke one day at an outing out there.
Right.
And the number 7 was what we did last year in just weddings alone.
Okay.
So there were seven weddings alone, part due to all the rumors. Once you step the rumors in,
correct.
We've been in operation as a management company this is our 2nd season. So being under the gun of 2 seasons of golf at a place that people think is being sold for property, it's going to be, like he said, it's a difficult business. Now times that by 2. I mean, you're working against people that thinking that we lost 3 weddings based on just being on the news. Lady called and said, well, we see that you're, possibly sold, we're going to go elsewhere. So we had to return deposits. So those things work against you, and I don't know that anybody knew that or not, but those were kind of the things that worked against us as far as doing only 7 weddings the previous year. This year, with type of things that he's talked about, social media, marketing that we implemented, we doubled it. We went to 13. So this year we did 13 weddings. Now with the sale and getting to meet everyone, which I haven't been able to do yet, individually, I'd love to do that. We've taken it and got it to 13, which at this point now we're at 6 going into wedding season, wedding booking season. So we're very optimistic as far as now moving forward, now that everything's been like you said, in the rearview mirror. You got a great deal on a golf course, a steal of a steal of a steal.
Oh, yeah.
I remember what you saw.
Yes.
So yeah, I mean, all those things are now in the rearview mirror where we're optimistic as a company to look and say, hey, wait to see what we can do now. So I mean, that's kind of where we're at. So the 7 was the weddings previous year.
Lisa's, Councilwoman Hicks Clayton.
Thank you, Council Chairwoman. My question is, well, first of all, I'll start by saying I think everyone in this room wants to see the golf course successful. And we all feel that it's a gem, which is why we pursued purchasing it and trying to get it secured from development. So with that being said, what I do want to ask is the City Council has always said and requires, and I fully support, a process for the RFP. Now, you sound gloriously fabulous, right, as a consultant. Thank you for being here. So I don't want this to be insulting at all to you, sir, not at all. My question is, would the RFP be through the process opened up, allowed others, maybe there aren't any out there, but at least allow the opportunity for others to submit the RFP, and then council would properly vet it out, because we've so long stood on that. I'd like to see that happen. And also, I would hope that we would encourage our community, our residents, to be engaged in the think tank process, right, of how this moves forward, what it will look like for the community.
What are you requesting an RFP for?
I think the reference was made by the mayor to RFP for the consultant, correct?
I had a large degree of difficulty finding expertise in this particular area. One of the things that his recommendation came from Cressa and others, who all said this is a great guy to have based upon his experience and his level of knowledge. I'm not, there are other people that do this, but I don't know that they have the background. I have no particular association. In fact, when I called them up, it was the first time we met. I can put out RFP, but I think you're, I'm not sure we can get anybody better. And he really comes highly recommended, unless the fee schedule was way out of place. I mean, I think he is the guy we really would want.
Madam Chair?
We have Councilman Bazey next.
Oh, I'm sorry, go ahead.
It's not for, actually for whoever's operating the course right now.
Eric.
Oh, I'm sorry, Eric. Okay, so I don't know if you changed your phone system. I know I've had an issue booking 2 events at your facility in the last maybe year and a half. I've called multiple times, left messages. Nobody ever gotten back with me. So I don't know what the problem is, because I mean I tried. I didn't hear nothing on the news, but I wanted to book an event there, two events within a year and a half. I never gotten callbacks, even though I left my phone. And so
I've heard that from other people too. Myself personally, people have approached me and said the same exact thing.
Yeah, and I've never.
Is there a person that's assigned to?
We have a phone system
monitoring the voice messages and calling back?
Yeah, it actually goes to our banquet person, her name's Jackie, that it goes directly to her email. So, I mean, if you were to call right now after business hours, it would go to a message machine. You would leave a message and it goes straight to our email. So, I mean.
This was during the day. I mean, you guys were open. It was during golfing season too.
Yeah,
so,
you're saying a year and a half. I'm not.
No, that's what I mean. The last year and a half, 2 events I tried to book. And I've called 3 to 4 times each occasion.
At this point, it's hard to pinpoint exactly what the problem would be when you call. Obviously, like I said, our phone system that operates now is you call. If nobody answers the phone, you leave a message. It goes directly to our email.
Council Chair.
Councilman Constance next.
Go ahead.
Councilman Muscat.
Right when I received your name from the mayor, I've got a good friend of mine that is a former golf course owner, and I won't mention a golf course or his name, but the minute I mentioned your name, he knew exactly who you were and what you've done, so that made me comfortable right away.
I didn't finish with Dave, I guess.
Councilman Abdullah?
Yeah.
I'm sorry.
I've had success stories with a lot of municipalities, City of Rochester, Shelby Township, Dearborn, good stories. And we build them from scratch in those cases. But achievements in recent time, I've been inducted to 2 Hall of Fames, whatever.
Good, good.
And I'm not looking for a job.
He's a member of the Michigan Golf Hall of Fame.
Yes.
He's not saying that, but he's being very modest.
Yeah, and a lot of involvement, because I'm not a golfer, but in these professional outings, and you've been very involved and instrumental in bringing some huge golf outings to Michigan. And so, I mean, not being a golfer, but everybody I talk to, I got like, if you can get him and he's willing to do it.
But the best accomplishment, greatest accomplishment, was both kids played golf at Michigan State, scholarship players. And that's the accomplishment that stands out. The rest of it has worked, but that's what it's all about.
Councilman Muscat?
But that was a comment I wanted to make about a good friend of mine, very reliable, former golf course owner, said about you. So makes me feel comfortable. And just another comment, I held a wedding at that golf course for my daughter a number of years ago. The building was a little newer at the time, but it was a magnificent view, very well. It's a beautiful place to have it. We clean it up and get it going. It's going to be, it could be a real good winner.
Parking lot was a little rickety, and other than that,
but I think over time,
that's good.
We can take care of things.
Councilman Constant, did you still?
My involvement would want to be at least a 6-month period where I could observe and be a part of the thing 10 to 20 hours a week or a month. Yeah.
Councilman Constant?
So it sounds like you come very highly recommended. So number one, Plante Moran Cresta said, don't use us, don't pay the money to us. You know, you might talk to this gentleman. And it sounds like you've got a lot of experience. But so the city...
I haven't teed off too many people along the way, that's all.
That's a great pun. The city would pay a retainer and then you would charge hourly depending or...
Correct. I'm going to give you a lot of information right at the front end. And then hourly along the way.
Thank you. Thank you.
Thank you. Councilman Abdullah?
So one of the, with the facility as far as the banquet center is concerned, in the area there's a significant number of Arab Americans that live here. And one of the reasons that they don't use the banquet facility is for a lack of, halal foods. And obviously, it doesn't have to be offered to everybody. But for those that do prefer, just like we'd have kosher, halal, etc., that's one reason I can tell you, in terms of Arab Americans' perspective, that they will not go to the facility because there's no halal food. Is that something that you would at least consider?
I'll give you an example of a banquet facility. And the banquet facility right now does $4 million a year, which is big business.
Which one, I'm sorry?
$4 million a year. And it's in Shelby Township. Mm-hmm. It's property called Cherry Creek. And they told us when we opened it, we'd have to have Italian buffets. That's the only thing that's going to work on this side of town. We went right against it and did a standard fare and have had huge success since. Hired the chef from Oakland Hills and marketed it very well, and it's succeeding. The golf is out, or the food and beverage is outstripping the golf. And that's really, with 300 seats, you've got to look at this situation on, you're talking about RFPs and so on. Maybe at some point in time, we look at an RFP and separate the food from the clubhouse. I don't know. I don't know Eric's expertise or what his company does, but we'll find out.
Madam Chair,
Councilman Constant?
I don't, were you finished, Councilman Abdullah?
Yeah, I mean, that was a
But
concern of mine.
obviously, whatever caterer was there, we do have a significant Arab American population in the area that has a demand for that. That's something the caterer could provide. I know at the Stitt Post, they will have.
Well, there's one in town already that I know of that.
Can I speak real quick? We do have a halal on our menu. So, I mean, that is an option, and we're actually looking to expand to get a chef in there part-time, because it's hard to get somebody in there full-time when, you know.
Right, right.
And then
when I'm just saying, when there's a demand for it,
And there
if
is.
well, then maybe it's got to be marketed better. Yeah, if it's an available option, it'd be more people apt to be able to use the facility for weddings, engagements, you know, et cetera, et cetera.
And that's where we're headed. You know, nobody here really knows anything about me. I don't know anything about you guys. So I haven't been able to tell you or show you even my proposal that I sent to the county, which was again 2 years ago. You know, we want to do similar to what the Stitt Post does. We want to involve the Polish people. We've got us. We've got a chef on hand that wants to do like Southern food. So we're branching out to those things to build the banquet business up, and the banquet business actually is what's up the most. What's down right now is the outings are down, and the outings are due to, again, the rumor of the course being closed. When you have an outing, you need a place to go every year. When you find out that it might not be there, you go latch on somewhere else, and now you're pretty much locked in. You know, it's going to be us trying to get them back, and that's.
But with all due respect, though, even if previous to the 2 or 3 or 4 or 5 or 7 or 8 years ago, it has not been doing really well. So that's why I'm saying we need some new ideas, new perspectives, and a much more aggressive approach in terms of marketing. You know, he mentioned social media for the younger generation. You know, to get the place up and running. I mean, again, we got it at a good deal, great. But we want to, it's a gem, and we want to up and running successfully and not pay out of our pockets.
Oh, and I'm 100% with you, Councilman Abdallah, and that's where I'm trying to make my point is that, hey, I've been there 2 years of kind of stalemate. Now those are the things that we're looking into doing.
Were you there previous 2 years or no?
I was, but I wasn't as part of the management company. Like, I didn't have any say in that. I was more just the worker. So, you know, those things as far as getting on the social media, we've implemented a lot of that stuff. We do that stuff now. We had Cyber Friday or Cyber Monday, whatever, Black Friday and all that.
Have a good
They're
website.
Buying stuff online. We've changed POS systems. We've got a new integrated, and I don't know if Mr. Dooling's heard of T-Snap yet. They're a cloud-based POS system where that's where it's headed right now, and we're on the cutting edge of where that software is going. So those are like the things that, you know, people here, I haven't had a chance to pitch myself, let you know what we're going to do. You know, there's a lot of plans that we've been wanting to do, but in the last 2 years, I didn't know if it was going to be a golf course. Now, if you're owning a business and you're sitting there, okay, let's put all our money and all our eggs in this basket, we don't know if it's going to be there. I don't know about you or anybody on the panel, but you're going to be a little reluctant. You want to see what's going on with the golf course before you make your commitment. So now that I see that, okay, it's going to be a golf course for 80 years, 100 years, whatever it's going to be, now we can commit and do the things that we want to do, things that you're talking about. You know, I've been in the golf business my whole life since I was 12 years old. So I'm in a similar mold as Mr. Dooling here, in that I've been around in different places and worked at different places. Now, if you were to take a look at the numbers of the golf have been in kind of a downward slide. That goes with the recession. He would probably be aware of, you know, he'd be telling you similar things. Now that we're kind of on an upswing, the numbers have gone up the past 3 years. They've climbed. The outings started to decline. Our leagues, like he said, have stayed pretty much stagnant. People don't leave unless they have a reason to leave. And we had people that were getting ready to leave. We got a lot of business from Rouge, which they started to slide down with the city of Detroit. We took a lot of their outings. The one that just closed on the trash dump, it's slipping my mind. We gained a lot of business from there.
Waste management?
Yeah, Waste
Van
Management. Van Buren Township.
Woodlands.
Woodlands just closed just recently. So we've gained a lot of leagues from there. We're getting outings from there. So those are the kind of things that are happening in the golf course business, that these courses are actually starting to go by the wayside because it is a tough business, and we're benefiting from that.
Well, and to be totally blunt, I mean, you're also, and it's with due respect, you're also now somewhat on the hot seat because, you know, we want to make sure this is going to be, I mean, you mentioned you have a plan. I, for one, I'm sure hopefully others would like to see, would love to see that, because we want to make sure it cannot be run the way it was previously run. There's going to have to be some changes so that this thing can be a profit center for the city, a success for the city, and something that the residents can enjoy. Right now, I don't golf, honestly, but you walk through there, it just looks dead. There's not much energy, there's not much liveliness in it.
I would kind of disagree with you if you ask the citizens, possibly. I mean, there are, in the golf business, there's golf courses that are down here that charge that amount. There's golf courses that are here that charge that amount, and there's golf courses that are high public end that charge a certain amount. You've got to find out where you want to be. Do you want to be in the Rochester, in the Birminghams? Do we want to be in the Dearborn Heights? You don't want to price yourself out of the area. And that's the biggest thing. So the residents around the area, the people that play there, the people that go there, the people that play in the leagues, those are the people that if we say, okay, we're going to take it to, you know, the high level, you may lose those people.
No, I'm not suggesting higher prices, not at all. I just want more and more residents using the facility, that's all.
No, I agree. And we're implementing a lot of the social media stuff that you're using so that, you know, hopefully now that they know it's going to be there and they can commit and make it their home, they will.
Good,
you know,
thank you.
We work with a lot of businesses in
The mayor called, and obviously the wheels started turning on revisiting the Warren Valley. And I know you asked the questions about, right out of the box, what do you charge or whatever. I came up with $6,000 as a retainer, which would be $1,000 a month. And then $100 an hour for consulting. And that would 10, 20 hours a month. Which probably over the 6 months would be $10,000 to $12,000.
How much was the hourly fee again?
100. Yeah.
And how many hours per month roughly?
10 to 20.
Is that a retainer that would end up being charged against, or is that a retainer plus the hour?
Retainer plus.
Okay.
Madam Chair?
Councilman Constant?
And this is more directed to the mayor, so what you're saying, what I think I'm hearing, and it sounds like it, if we did an RFP, I mean, we might get something from some planners or something, but this gentleman is sort of unique for golf courses, and we wouldn't get a lot of people bidding or companies or...
You could get bidders, but what I heard is same thing Councilman Muscat heard, that he's like one of the best. And if you can get them, you're going to get some really good ideas. And we want a couple, Eric's and Mr. Dewing's knowledge together, and then work up a plan, and then follow the plan.
Okay.
Thank you.
Well, thank you. And we'll take your resume.
Okay. Very good.
Thank you. Thank you for coming, sir.
Thank you.
Okay, next agenda on the item is the RFP for fire department aerial truck. I know it's not till 7:45, but are you ready to present it early?
We can if you'd like to.
Yeah.
Okay.
Just go ahead and present it.
Mr. McGow from Miller Canfield, this is our bond counsel, so when we go out for debt, they kind of guide us through. And so I think the letter kind of explained it. We put together an RFP and went out to the financing institutions, banks, and lending companies, and bid out the fire trucks, the aerial truck, and the one rescue squad. Budgeted is $300,000, so it's like $926,000, and we're going to bond for $626,000 as a. We went out for bids, and Comerica Bank was the low bidder at 3.37% for the 5 years. The one caveat in there is that we have to pay up to $1,500 of their bond, their attorneys, to review the documents that are drafted by Miller Canfield. We've done this in the past. $1,500 is a high number. The last time that we did this, it was under $500. So I don't think $1,500 is going to be the cost for they use Bodman Longley, which used to be our bond counsel previous to Miller Canfield, so we're familiar. They're familiar with your documents. And so really, you know, I'm going to turn it over to Pat. You can talk about the resolution and what will happen from here. And if anybody has questions, we'll both be. So.
Great. Thank you, John. As John said, I'm Pat McGow. I'm an attorney at Miller Canfield, and I've worked on the city's equipment and other bond financings. Now, this is a process we've gone through for these types of equipment financings. And similar to prior results, we were happy to get at least 3 bids. We actually received 5 different proposals with the different options, but 3 different financial institutions that bid on the financing. And I'll take care of it. As John indicated, Comerica Bank was once again the low bidder, even with the cost of their counsel included in the financing. So the recommendation is to award to Comerica Bank as the low bidder. We have prepared for you a resolution which approves the installment purchase agreement. This is the financing document that's actually a 3-party contract between the city, the bank, and the vendors of the equipment, and essentially it provides that the city will pay for the equipment in installments over 5 years at that interest rate of 3.37%, which was in their bid. So this is the last action item by City Council required to complete the financing. You've already taken action items to approve the purchases, and now that we've got the bids, we can go ahead with the financing, and if approved, we could get this closed in the next couple weeks so that the money's available for the equipment purchase. So this is a tax-exempt obligation of the city, so you get the advantage of that lower interest rate by being a governmental unit and borrowing tax-exempt. And part of our job is to prepare all the legal documents and the opinion which the bank needs so that they can treat that as tax-exempt interest for their books and records. So with that, I'll stop talking and answer any questions that you may have about either the resolution or the agreement.
Councilman Abdullah?
Okay, the $1,500, that would be the total closing costs and attorney fees, right? Or is there any additional closing costs?
Well, there's a closing cost for us to pay of Comerica's attorney to review the documents. Then we'll, Miller Canfield will have an expenses to assist us to go through the bidding process.
But I'm talking about the bank's closing costs over and above the interest rate and the $1,500. There's no additional cost, correct?
Correct.
Okay, thank you.
Madam Chair?
Councilman Constant?
So John, silly question, but so the city's buying the fire truck, the bank is paying the vendor, and then we're paying the bank back over time.
That's exactly right.
Because it's too big a purchase to do in 1 year.
Yeah. What is the cost for the truck?
It's like $725,000.
What's the life expectancy of that truck?
Well, our current trucks are well over 20 years old. We'll get 20, 25 years out of that truck.
So it's worth the investment.
That was the demo price. They used it, if you're going to buy one of those, typically it's $800,000 to $1 million, $800,000 to $1 million. We got the demo for $725,000. That was a good deal.
Okay. Councilman Abdullah?
The aerials, obviously, like in the incidents where you had, I know you helped out in Inkster at the Carriage Apartments.
Right.
And that was is it 2 or 3 story, I assume?
Yeah, the ladder that we're getting is 75 feet. So it's a 75-foot aerial. But most of the time you use those is at a residential structure. If you look at it at the news, if they're showing a house fire, you'll typically see one of those up. I mean, Detroit has a lot of ladder trucks, and people are always thinking of high rises, but you use them on residential structure fires.
I know you mentioned it was safer for a lot of the men and women
in the
fire department because you're spraying from the top.
Yeah, we had a fire on Mayburn a couple weeks ago, and the stairway was burnt through on the interior, and they tried to, anyways, they had to put ladders up on the outside. If we would have had that truck, we could have put the stick up and just poured water in through that. It would have been much safer and faster and knocked it down a lot quicker too. So.
Right. Thank you, Chief.
Okay. Any other questions? Okay, at this time, our study session is done.